Good morning. It's Sunday. It's 9:44 a.m. Pacific Standard Time, and today's date is 3/13 of 2011. Next week, we're going to have what we call the first weekly triple witch options expiration price action movement during a 5-day period. It's going to be a good one at that, too. And basically, when we look at the key indexes like the S&P 500, we do look at them in a little bit of shorter time frames. This is a 3-minute here. And we can see outside of, and then we have a 60-minute. And we can see where the bottom ranges were met right here in the 60-minute chart. Right here. That was the bottom of the 60-minute move on Friday, and that was a 60-minute delta expansion in the SMF platform, which this whole move here is going to confirm this whole move, this break off the bottom here, and how this 3-minute was running to the right side breakout of the market. So we had what we call teeny expansion, and then the teeny contraction held the teeny expansion breakout over here that occurred originally in its expansion, and then they came right back in the same way. And every one of these diamond alerts right here also the most important thing is it validates it, because it's a market maker platform. So we could clearly see what the market makers on the floor were doing. That meant that when we were breaking on the second right to the very top over here, right up here at that 1308 handle on that intraday handle level, is that we had another greater round of 3-minute teeny expansion. And that meant that equities were firming up. However, it doesn't qualify for a total market reversal that we would have been looking for on a Friday closing bell. It would have had to have been more like this on a 60-minute chart. And it would have had to have been where these are the kinds of lows that we look for in volatility, is that we're looking for, just like this is where the S&P, and this is a 60-minute, so you can see it. But this is that gap down. Now on the home page of the SMF site, ProTrader, smfprotrader.com, and there's other ones that we have. If you go look there, you're going to find out the distance of that gap down. But then in the original price action volatility on the way down, it was a sell short until we got to this 60-minute bottom. And we came up. Now this is a 60-minute intraday bottom. And that was on 2/24, and it was around 2 o'clock p.m. when it came in, Eastern time. And the thing about it is, you had the knife hook low, and you traveled the whole distance. Then you failed. Well, so what? You filled half of that 60-minute bar. That meant that the S&P wasn't going to go higher than above that delta, and it was still below probably half of that bar. Half of this bar here was 1328.21 on a 60-minute. And this high right here on this bar was 1327.82 right here. It's all down here, you know. So that meant that there was weakness, and once again, MMTs, it was contracting, and it said that there would be weakness, and that's why during that time frame, that's why that pullback was right back to that last extension, and stocks had weakened up. In order for a qualifier to meet the SMF market maker bottom is that we would have had to come all the way back up here to 1325, all the way back over here, this line where my little paw is going across there. That's 1332. Then you get right down in here, and you get right back over here where this little paw is down here. This is where that breakout was. What you had to do was you would have had to have kept going in that 60-minute distance and come all the way back up here and challenge where this body of the gap down, half bar body of this gap down on that 60-minute was.